I'll just give you an update on the facilities. As you are aware, the new plant is up and running, and we are focusing on the manufacturing of value-added products. With regard to the EU approval, we are still awaiting for the committee at EU and an approval from the EIA, that's Export Inspection Council, with regard to the approval. And I think they attributed more towards the pandemic issues, and we are still waiting for that. However, the US approval has been accorded long back, and we are also doing our ready-to-eat products regularly from the new facility. In fact, the volume is picking up from the second quarter onwards, and we look forward more higher volume. And on a brief note, we had envisaged certain part of expansion in the ready-to-eat, which we are right now seriously planning up, and which we will be taking up very soon, hopefully before the end of this financial year. So, as I stated last time, we have discontinued the leased hatchery facility, and the construction of the phase 2 of the hatchery at Ongole is nearing completion. We are hopeful that this will come online in this fiscal. With this, all our hatcheries are owned and operated by the company. With regard to farming of the company, we have been consolidating the extent of area which we are currently operating. In this year, there's been a significant consolidation taking place, as we want to focus more on the core activity of processing and export, assisted by some of the hatchery business, which is basically going to help us to develop our relationship much stronger with the primary producer or farmers by giving them quality seed and able to do a buyback of the raw materials from them. With that, I now request Mr. Vijay Kumar, our CFO, to take you through the brief highlights of our financial performance. Yes, over to you, Vijay.
Hello. Welcome to everyone on this call.
Mr. Kumar, if you can speak closer to the handset, please. Your voice is echoing a bit.
Okay. Hello. Welcome to everyone on this call. I shall brief you the financial highlights of the quarter and of the year gone by. As mentioned earlier, our product mix has been improving with a higher proportion of retail and value-added products, which has aided the overall realization. A further fillip was provided by weakening rupee on a year-on-year basis. For the quarter ended September 30, 2020, our new export sales grew by 2% year-on-year to rupees 2,480 million, despite a 2% year-on-year drop in shrimp volume sold. The geographic breakup of our volume sold in Q2FY21, which was 2,671 metric tons, is as follows: 83.7% was to the US, 14.7% to European Union, and the balance 1.6% was to China. Profitability in the quarter improved primarily on account of increasing the contribution of value-added products in the sales, lower rate material costs as explained earlier. Our EBITDA therefore grew 4% year-on-year to rupees 441 million, resulting in a margin of 16.7% in Q2FY21 as compared to a margin of 15.4% in Q2FY20 and 9.6% in Q1FY21. For half year FY21, our EBITDA grew by 11% year-on-year to rupees 654 million, and margin expanded to 13.5% from 11.7% in H1 FY20. Higher depreciation due to the new plant coupled with increased finance cost, in line with higher inventory, resulted in marginal decline at the PBT level. However, lower tax rate as compared to the corresponding period last year resulted in a growth in PAT. The PAT for the quarter came in rupees 250 million versus rupees 219 million in Q2 FY20. For H1 FY21, the PAT stood at rupees 367 million as against rupees 303 million in H1 FY20. This is all from our side, and I now request the moderator to open the floor for questions.
Thank you very much.
Okay.
We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashwani Agarwal from Ashmore. Please go ahead.
Hi, good morning, and congratulations on a pretty decent set of numbers in a very challenging environment. The question I have is that, your opening remarks appear to indicate that, shrimp availability is still a challenge arising from excessive monsoons, early harvest that happened, and so on and so forth. So, would you sort of try and outline what we should expect to see over the next 3 to 6 months? Or is it that all those challenges have already been addressed in Q2 and Q3 and Q4 are more likely to be normal, at least from a shrimp supply perspective?
Yeah, thanks for joining us. And with regard to your question, the shrimp supply, which I had mentioned in the opening remarks about it being affected because of the premature and distressed harvest in the earlier part of first quarter and part of the second quarter, that I said has an impact with regard to the size availability, especially now in the third quarter, because most of the supply which was supposed to be harvested in second and third quarter has been prematurely harvested in the first quarter. And this is primarily pertaining to the supply in the state of Andhra Pradesh. Now, the states of Orissa, Bengal, and Gujarat continue to produce their part of shrimp in the aquaculture areas out there. However, that was also limited because of the impact of the lockdown during the April and May month, which had made the transportation of the shrimp seed difficult to those areas. So the point, that is what has happened for the last 6 months. Now, going forward, we are noticing the farmers stocking up again, and of course, post the cyclone and all these monsoon issues, which you just mentioned, and they're actually stocking up again. Now, we are looking forward for the supply to be improving. But when I mentioned that we do have supply issues, especially we did have them in the second quarter, and we have them right now also. But as things are going to improve, we expect them to be improving more the next 1 month, and then onwards we should look for better supply in the next 3 months. We should actually wait and watch, as this year there has been multiple effects. One is the pandemic side, and the other is the indirect impact of the pandemic, where the seeding has been at a lesser number, and the reaction of the primary producer to the market forces. Right now, as we speak, the raw material pricing is at a very steady and firm level, at a high level, because of the shortage in the supply as such, and the demand being there at a very high level because of the orders which have been coming in from the overseas markets, whether it is the United States or European Union. So we are eagerly waiting how the supply will be, looking forward for an improvement in the supply over the next, as I said, towards December and onwards. So we are at this point, it's to be precise, as I said, it's more of a livestock. So we're just waiting for how the weather as well as the any sort of diseases. Most likely, we don't anticipate any major issues with regard to disease, and we just are looking at the weather challenges which the farmers will be facing. So we do expect things to be normal, but definitely you need to understand that it is the first crop of a year, or rather the first crop, the summer crop of the year, which is always at the highest level. So typically, winter crop does have its impacts in general at a lesser level. And this year, in general, the pandemic effect also, we should see how it's going to affect. So with the next 6 months, or the next, basically the second half, if you are asking, it's not been exactly going on as it is supposed to be originally in general, because of the supply-related issues which have been percolating from the first half. So hopefully it's going to get stabilized now as we speak, and we are looking forward for much more better improvements from December month onwards.
Okay. And another question I had, I couldn't hear your opening comments clearly. You mentioned that EU approval is awaited, but the US FDA approval is in place. Did I hear you right?
Yeah, you heard correct. You heard it correct. That was the US FTA approval was in place even during the first quarter, to be precise, towards the end of first quarter. Yeah, when we had a Q1 con call.
Okay. And in your Q1, you had mentioned that you were running your ready to cook at full capacity. Is that still the case?
Ready to eat.
Ready to eat, sorry.
I had mentioned the ready to eat. Yes, that was. Yeah, I mentioned it during the Q1 con call, which was I think sometime in the middle of Q2, sometime in August, I guess. Yeah, that is true, and we are continuing to utilize it. But again, whether the ready to eat or ready to cook has to be utilized, it is the supply which also matters. So as such, our order book is full with regard to ready to eat, and that is one of the reasons why I also mentioned in my opening remarks that we are looking forward for expanding our ready to eat capacity in the near term, that is most likely in the present financial year itself. But yeah, of course, whether this year's supply is whether it is encouraging or not, but at least we are planning for from the next financial year for having a higher capacity than originally envisaged when we started commission this new facility. So it is definitely going good. As I said, our order book is good. Everything is going good with regard to ready to eat. We currently have been facing some supply issues, and as the supply picks up, we will continue to utilize it to the maximum, to the fullest extent.
And ready to eat, how much? What is the kind of tonnage you're looking to add, and how much will it cost? That's my last question.
It will be double the capacity of if once we take a final call on that. It will be currently the ready to eat is 5,000 metric tons. It will be 10,000 metric tons once the additional capacity. It's going to double the capacity. So 5,000 becomes 10,000 once it is fully installed. Hopefully, by early next once the decision is taken. So right now we are planning for it. And sorry, what was your next? The other.
How much will it cost, and how much time does it take?
It's approximately budgetary-wise, it takes around 6 to 7 crores max. Not even, it will be around 6 to 7 crores maximum. Because it should be even lesser, but it's just that we have already purchased the back end of the equipment in the initial run itself. So I don't know if you're aware, or if you would have heard me in the previous calls. The ready-to-eat capacity was being planned to expand much before the commissioning of the factory, keeping that in mind that we should just get it on a plug-and-play basis. So that's how it was planned. So it's going to be like, once we plan, it's going to be like 6 months max to get it fully installed. And the budget is around 6 to 7 crores max.
Okay. Thank you, sir. All the best.
Thank you.
Thank you.
A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Nitin Gosar from Invesco. Please go ahead.
Hi, Choudary. Good morning.
How are you, Mr. Nitin? Please go ahead.
Fine, sir. I hope you're also keeping good.
Yeah, we are keeping good in this correct pandemic crisis. Yeah, please.
Great. So a couple of things. You mentioned that ready-to-eat facility, which is 5,000 capacity, is going on a good utilization. But on ready-to-cook from new facility, have we commissioned any production from that part?
Mr. Nitin, the ready-to-cook is the one which starts first, actually. We did commission it. But whether that is actually transpiring into the entire volume is not yet factored in because of the current year's scenario which is going on. So we have commissioned both the ready-to-eat as well as ready-to-cook at the same time. Ready-to-cook facility is in a larger level. Ready-to-eat, because our orders were envisaged much before the commissioning of the factory, and we have our regular customers as well as newer customers who are placing the orders for the ready-to-eat products. That's one of the reasons which I mentioned. Our order book for that is full. It's just that we need to look at the other requirements which are there for producing those products.
Okay. So the earlier facility, which is around 9,250 metric ton, that would be running at full utilization, and the new ready-to-cook facility which has got added during the year, what would be the utilization we would be seeing today?
If you remember from the past, our idea is that we would be running the new facility at around 50% capacity for the first year, and thereby moving it to 60 to 70% in the second year. And basically, 75-80% is the optimum utilization which we look forward to in our both facilities. Now, the new facility, of course, it is whether it is about bad omen or whatever it is, we were really looking forward. We got everything set by March, and this year was supposed to be with a big bang on all fronts. Unfortunately, the pandemic has kicked in not only in our lives but also your life and everybody's life, unfortunately. So, otherwise, originally as planned, we were supposed to utilize this 50% of that capacity and utilizing 75-80% of our existing old 9,000 metric tons capacity. That's how it was planned. So right now it's a little bit off that part. That's why you see a marginal drop in the volume even compared to last year. Yes, we were originally targeting for a higher volume than last year, so that got affected on various fronts.
Fair point. Got it, sir. So second question is, do we have some clarity now on MEIS or the export incentives? And what would be the numbers that we would have booked for the quarter?
Yeah, the number, Mr. Vijay Kumar will just give it to you 1 minute. You said for the first quarter or the second quarter?
Hello. Yeah. Second quarter export benefit 5 crores 88 lakhs. And for half year ended around 18 crores 20 lakhs. Hello.
Yeah, got it, sir.
So that means you have the half year and the second quarter.
Yeah.
Got it. Got it.
That is one. And with regard to the policy, your question, the government of India has not withdrawn the MEIS scheme as such. However, through various notifications and communications sent by the government of India's concerning departments to our company as well as to the trade bodies, they have cited that either because of the pandemic or whatever it is, there is some sort of a shortage of funds as such, and original allocation for the scheme was 5,000 crores as of August 31st. On September 1st, when we got our notification, it was 5,000 odd crores. But however, just last week we got another notification from Government of India enhancing the MEIS fund allocation from 5,000 to 15,000 crores. And they also informed us through that notification that if any sort... Yeah, sorry.
Sorry to interrupt, but Mr. Nitin is disconnected.
Okay.
A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Ayush Mittal from Mittal Analytics. Please go ahead.
Good morning, sir.
Good morning.
Hello. Good morning. Am I audible?
Yeah, Mr. Ayush, please go ahead. You're up.
Yeah. So, in continuation with what you were trying to explain to the previous participant, I would like you to complete that part and provide us the clarity on the MEIS thing.
Yeah, so let me continue that. As I was saying, the government has enhanced the fund allocation for the scheme from 5,000 to 15,000 crores, and added to that, the notification which was issued last week also confirmed that any pending licenses or any of the licenses which cannot be applied by the exporters in the current financial year for the obvious reasons of the fund allocation, they can be applied even in the subsequent financial year. So that's what gives a holistic picture of the present treatment of the MEIS scheme for the current year. We would, of course, definitely be watching closely of how the Government of India is going to deal with the scheme, and we will accordingly be treating our strategy and our business accordingly. We'll be planning it out. But yeah, that's how it is with regard to me. Sorry.
To get a better, thanks for this update. So, for the month of September, have we accounted the MEIS at the rate we used to account for or not? Before or not?
No, it has accounted same as it has been reduced. Are the same, man? It is the same rate. Okay.
So, for this for all 3 months of this quarter, we have accounted MEIS at the same rate as before, as there was no change in the policy.
No. Yeah, that's what it comes from.
Okay.
Please go ahead.
And for this coming quarter also, you will be applying the same rate?
We will, as I said, we just got a notification last week. We will be applying only based on the Government of India's instructions and their notification. So we will be watching for the stand of the Government of India, as it has been changing every month or 2 months. So we're just waiting cautiously, as it is totally dependent on the Government of India's initiative, whether to continue, how they would continue, to what extent they would.
Yeah. So as of today, what is the status?
As on today, as I said, they have allocated additional funds, and they also mentioned that they would be, we can be applying even for this year's pending licenses even in the next financial year, in a mechanism which they have expressed that they will be stipulating as we go into the future. So we just need to wait for the government's policy to take a concrete decision. As and when government gives more clarity, we will be changing in the way we account for sure.
Got it. So, sir, as this has been an overhang that MEIS is a substantial part of the profitability that all these shrimp processor earns, and it's a big part for the whole industry. People remain concerned, what if there's a substantial reduction? How does the industry cope up, or what did you see in the month of September? How did the prices adjust, or something happened when this scare happened around this policy?
Yes, with regard to MEIS, it is definitely a good part of the profitability of the company or the sector, but not just seafood sector, but many sectors, export sectors in the country. And we have been pursuing through trade bodies, also with the Government of India, with regard to continue this scheme, number one. And considering the global scenario as such, we were supposed to have a replacement scheme for MEIS, the refund of, under a different nomenclature, refund of duties and taxes, which, of course, the rates haven't yet been finalized. We would have had a little bit change in the scheme which was WTO compliant, hopefully in the beginning of this year. Unfortunately, I think the pandemic had affected the government's plan, and we couldn't get an alternative scheme or a reasonable alternative scheme in place, and hence they are continuing MEIS at this point as of the current year, and we need to see how they will go by. With regard to the concerns you were mentioning about the MEIS or the export incentives, yes, they are part of the good part of the margins. However, we have been elaborating this over the past 6 to 9 months, almost 9 months. We have been saying that our dependence on MEIS has, or rather our profit margin, our dependence of our profit margins on MEIS has to be overall coming down going into the future, because we already are aware that the scheme is being either replaced or being substituted with something else, and even if MEIS is removed, how we address that is by doing more of higher margin products, so that we can safeguard ourselves with regard to any such withdrawal of any such schemes. So it's in the long term, value addition of the product is the only key to to have higher margins and have us independent of such schemes going in the future. But as I said, it's a long-term process and strategy which we are already implementing with our new capacity. So it is a ready-to-eat and value-added product which will be garnering us higher margins. Thereby, we will be able to absorb any sort of issues which we may face if at all such schemes are withdrawn. However, we are confident that the Government of India's focus on export sectors is is a priority, and they are looking forward to either replace it with a different scheme or in a different manner. However, as of now, we have information that they are continuing. They are going to continue it in some way or the other. It may not be MEIS, as I said. It's going to be a different nomenclature. It may be a different methodology of direct credit, like duty drawback or whatever. But as of now, we have confirmation that it is going to continue, considering the priority on export sectors by the government.
Got it, sir. Thank you. Also, can you share some comments on what do you expect for the growth of the industry on the production side, shrimp production side, going forward? I missed your initial comments actually.
Yeah, the production side, actually, we have had issues this year, which I had explained because of the panic harvesting, as well as the weather-related issues which we had in the first half year of the current financial year. We do see certain bit of shortages currently, and we believe they will be improving, and it will be much better from towards the next month, from December onwards. However, going to 2021, because of the supply issues as such, I mean, with the pricing, the pricing which has been so firm and stable at this point, we are confident that several producers will be going in for stocking during the months of December, January, and February, and onwards, thereby expecting a great extent of supply improvements in the first quarter of FY22 for sure, because of the way the market is right now moving ahead. Yeah.
Okay. Thank you.
Thank you.
Thank you.
A reminder to the participants, in order to ensure that the management is able to address questions from all participants, please limit your questions to 2 per participant. Should you have any follow-up, request you to rejoin the queue, please. The next question is from the line of Samir Raj from Nippon India Mutual Fund. Please go ahead.
Yeah, good morning, Choudary.
Good morning, Samir. How are you?
Yeah. I'm fine, sir. Thank you. Sir, just wanted to get your thoughts on outlook for FY22. So you just explained in reply to previous question that you expect better supply from farmers in FY22. So on demand side, if things stabilize, because now vaccines are progressing pretty well, do you think FY22 could be a very good year and we can reach the peak capacity utilization for both the plants?
FY22 is going to be definitely a better year than FY21 for sure. So it is because FY21 has been significantly impacted by various reasons, and especially which is the pandemic. It's a different scenario altogether. But FY22 is bound to be in a much better position for sure. As of now, what we look for, or we envisage, is that today, if you consider the raw material pricing and the stable market and the demand which is being there, today we have demand for us, for our company, but we don't have all the required supply there. And added to that, we have troubles of not being able to ship to our customers because of the logistics issues, which I also mentioned in my opening remarks. So there have been quite a number of unforeseen challenges in the present year. And we expect, your question is definitely valid, and we also look forward for a positive FY22. However, with a caveat is that we don't know how the pandemic is going to be.
Assuming things become normal. The pandemic is not in our end, but assuming things become normal, then we could certainly see increase in demand.
Definitely. The demand as such is there even today for us. When I mentioned about previous issues with regard to restaurant closures or improvement in retail, our order book is still good as on today. So, and we are pretty sure when things get normal in FY22, hopefully, from this pandemic issues, hopefully the major markets like USA and European Union at least try to get back onto their normal business lives. Hopefully these vaccines kicking in before the end of 2020, some of them which we hear every day on the news. We are confident that the demand will further increase next year, and we will be able to do a lot better next year. But I'm not able to put any sort of quantification to that. I hope you can excuse me on that at this point.
Sure. And sir, my second question is related to this doubling of seed capacity. So I think done pretty well in the first phase. So I just wanted to understand from you what could be the financial benefits of this doubling of seed capacity. How do you see that adding to our bottom line?
Definitely, Mr. Samir, last time, several times we have discussed in the previous calls also, which I think I would have addressed this point, is the margin enhancement for between ready to eat and ready to cook is definitely on a higher side. Like we look at a 50 cents minimum per kilo, 30, so 50 that's around 30 cents per 20 to 30 cents per pound, which is around 50 cents per kilo minimum. So when if we can produce more of such products, definitely the margin expansion is going to be is going to multiply accordingly, right? So if we are currently, say, planning to utilize 5,000 metric tons to the best possible extent this year, or say we are going to use it to the optimum level of 75-80% in a normal year, and if we have 10,000 metric tons, accordingly the margin expansion is bound to happen. So we are totally gung-ho about it. We are totally confident of having a better margin expansion as well as better revenue pickup, because our unit value also is going to enhance.
Yeah.
Definitely in the interest of
replying that was actually my next question. I was just trying to understand the seed capacity. You're planning to double your seed capacity, and your new plant is just about to commission, you said, in the last quarter. So how that will help us? No. You said that will help us with communicating with the farmer and also.
I'm sorry, Mr. Samir. I'm sorry to interrupt you. You meant hatchery, the seed capacity.
Hatchery, yeah, seed.
Oh yeah. Sorry. I heard it as feed. I'm sorry, because we are not into the feed business. So in the case of the hatchery, with regard to the business front, as such, we are looking forward to almost increase our present seed business by almost like 50 to 60% for next year once it picks up. However, the profitability from the hatcheries with regard to that particular part, we are not really looking at a major benefit to the company, but rather we are focused on developing and enhancing our relationships with the primary producer. Definitely, we are having additional business. We are going to have more margins from there, but our core focus of retaining the hatchery business and increasing it further and plan for this expansion is mainly to grow our relationship with our primary producers, even the old ones, the existing ones, as well as the new ones across India, because we have also been supplying seed to the state of Gujarat and Surat through air shipments. So we want to develop and increase our farmer base, which is the ultimate solution for our exports, processing and exports, will be with the support of the primary producer, and we thank them for all the support they have been giving us for the past many years.
Right. So more strategic in nature, that will help us strengthening our relationship with farmers, which will ensure good supply and thereby help us increasing overall volumes.
Yes, definitely. That is the main objective. But at a time, if at all, if it really has a significant impact on the P&L of the company in a holistic manner, we would definitely keep you posted. But we know for sure it will be the processing and export which will be dominating the business of the company as such. That is the core activity. This seed business is more of aiding tool or a supporting tool to grow our relationship and to develop our relationship more with the farmers.
Sure. Thank you so much, Choudary, and all the best. I'll come back in queue.
Thank you, Mr. Samir.
Thank you. The next question is from the line of Deepesh Kashyap from Equirus. Please go ahead.
Thanks for taking my questions, and congrats for great operating performance in this quarter. Sir, give me the contribution of products sales volume quarter. I think last 8%.
Sorry. Sorry, Mr. Dipesh, I'm sorry, your voice was breaking. Can you repeat your question?
Okay.
Hello?
The contribution of value add to the total sales in this quarter?
Mr. Kashyap, we are so sorry to interrupt, but your voice is breaking up, so maybe request you to move to a better reception area, please.
Sure. I'll come back in. Fine. I'll call again. Thanks.
Thank you. The next question is from the line of Nitin Awasthi from East India Securities. Please go ahead.
Hello, sir. Just had a few questions on the financials. So the MEIS exact amount booked during the quarter would be?
That I think he was giving. That is the net amount he was saying.
The net amount. That is
Net of 5.88 and 18.2, right?
Yes.
Yeah, so roughly 12.3 crores would be the MEIS booked during the quarter. Now, out of this, how much was booked in September? Any idea? Because the notification that we have in our hand says that there's a cap on the amount you can book from September to December.
Yes. In September, we have booked 12 crores 66 lakhs. Okay, and the drawback is 13 to 34 lakhs. With the gross
Sorry. The MEIS booked in September would be?
It is half year actually. For half year, we have booked 12 crores 66 lakhs. And for the quarter, we have booked 7 crores 3 lakhs.
Okay, great. So, and apart from this, what would be the hatchery income this quarter around?
Hatchery income around 6 crores.
Around 6 crores, okay. And sir, just lastly, I want to understand something on the industry, which is that right now, because of the things you mentioned, we are seeing a very different scenario where internationally we are seeing exports and markets contracting and prices of shrimps falling to the lowest levels, whereas the farm gate prices in India are rising as if there is a boom time going on. Now, because of this, is there any squeeze that the processor is going to feel going ahead? Because we had inventory with us which was not exhausted because of the previous opportunistic opportunity that we grabbed because of the panic harvest. Now going ahead, do we still have inventory from that? And if not, then are we going to see a gross profit margin shrinkage going ahead?
The first thing is with regard to the low priced inventory which was accumulated during the first quarter of the current financial year. That was at pretty much a very low price for the past 2 years. We got it at a very low price, number one. Number two, international prices were low at that time. Right now, they have also raised. Yes, I do acknowledge that the prices have not raised on par with how the Indian raw material prices are increasing. The Indian raw material prices have been increasing at a much higher level because of the demand overall from all the industry players in the country and because of the shortage of supply. And this phenomena is there every year. Where it happens this year, maybe we have a noted number that the overseas demand is at a much lesser level because of the closures and lockdowns and whatever shutting down of various food service sectors, etc. But the difference between the overseas market and the domestic market has always been there at certain time of the year, and we are seeing that currently where the raw material prices have gone much beyond than what the overseas markets actually are presenting. They are not raising on par. So our Indian domestic prices have gone much higher than what the overseas price increase has been. We are looking forward for an increase in the price. Meanwhile, as the supply stabilizes, as the supply improves here, we look forward for a reduction in our raw material prices too. Naturally that will have its impact on certain products or all the hello.
Yes, sir.
Yeah, I was saying that that will definitely have certain impact on certain products which are produced by various companies, and it depends which market and which products they are producing. So it will be there. It's not that the impact will not be there, but as the supply improves, it should be getting to normalcy. Right now, it's a shortage of supply, and this phenomenon is there every year. Please, this is not the only time when there's a shortage of supply. It's been there every year. there are at certain times in different months. And right now we are seeing it more because of the pandemic aftermath, the after effects of the lockdowns.
Okay, sir. Great, sir. Thank you so much for explaining the situation patiently, and best of luck going ahead.
Thank you.
Thank you. The next question is from the line of Deepesh Kashyap from Equirus. Please go ahead.
Sir, as much as with respect.
Mr. Kashyap? Mr. Kashyap, your line is in talk mode. Seems like we lost the connection for Mr. Deepesh Kashyap. We move to the next question from the line of Puneet Mittal from Global Core Capital. Please go ahead.
Hi, thank you for the opportunity. I had two questions. One was that you mentioned that the farm gate prices are higher than the global shrimp prices, or it's gone up higher than the global shrimp prices. Now, do you think because of the farmers will be encouraged with the high prices and do a better stocking and harvesting next year, and also for the second crop, I mean, and also because the prices are high and they may correct, they may again have a panic harvesting, which means again there may be a supply squeeze for the second harvest.
First I'll answer your. Right now the pricing is very attractive and lucrative for the primary producer. Number one, it will definitely encourage them to look at better stocking. However, that is not going to reflect in the present year entirely, in the present financial year. It will only be towards the end of the financial year because whatever stocking has to be harvested in the next 2 to 3 months is already being done. So we are looking at a crop of 60 days to 100 days. So whatever has to be harvested between December January is already been stocked in the last 1 to 2 months max. And that is one of the reasons why I had told one of the earlier participants that because of the firming up of the raw material pricing here in the country, we look forward for a lot of primary producers or farmers being enthusiastic of going for a good amount of stocking for the 2021 summer crop. That's the reason which I had mentioned that we are very confident as of now at this point, based on the present scenario, that 2021 will definitely be a far better year for the industry. But again, we just need to watch out how things will turn out, especially with regard to this pandemic. Otherwise, definitely it will be good. It will be a good scenario for next year for sure. I think that answers your question.
Yeah, that makes sense. The second, I remember last year winter or post-winter, there was an issue where there was the inventory was very high with the stockists in the overseas market, and because of which the demand was a bit lower than usual. How is the inventory situation of finished products in the overseas market? One, and as you said, because we have supply squeeze from our end in India, who's fulfilling that gap that we are not able to supply in the overseas market?
The overseas market's demand is also affected by the pandemic. It is not the same as what it has been earlier in the earlier years, and that's number one. And so the supply from India, even though India, for example, India had its lockdown for 2 months almost, that doesn't mean that the supply to the overseas markets got affected from countries like Thailand, Vietnam, or Indonesia for that matter. They continue to export from their side. Apart from that, the demand from overseas markets is stable right now. There are sufficient number of orders, but we expected in a normal year, had it been the food service and restaurant chains running in a normal level, definitely the demand would have been much higher than what it is today. Unfortunately, that's not the case because of the effects of the pandemic. As things ease out, as things get better, hopefully this so-called second wave of COVID cases comes to an end, or at least comes to normalcy in the near future, and we look forward for better consumption of the food products, and also which also affects the seafood products and shrimp. And we look forward for a positive future, even in the present year as it goes by. We need to see how things will be changing over the next few weeks because of the second wave of cases which are being reported regularly, both from the European Union and from the United States.
Okay. On the related, if I can squeeze one more, you said that your order books are full and there's a supply squeeze of the raw materials for you. In these scenarios where you are unable to fulfill the order because you do not have enough supply of the proper size of shrimp that you need, how does that work? Are you penalized, or how does, is there an impact in terms of how does that work for your P&L, because if you have committed orders and you are unable to fulfill them?
Yeah, the first thing is this is not an Apex specific problem. That's one thing. The second point is this is an industry-wide problem. The second point is we are in coordination with our customers, with whom we share a long-term relationship, and we have been explaining them the situation, and they are also very understanding. But that's how it is done when you have a long-term relationship. And we have been providing them the products as much as possible, and they also are able to understand the present scenario. So they are not in a position to actually increase their prices in a full level manner based on the raw material prices out here in India. But that is more of an India-specific problem, and as the supply improves more towards the end of this month and December, we think things will get stabilized. Currently, which I also mentioned to the earlier participant, that there definitely will be certain extent of margin effect in the present period. But we look forward for change in that as we go towards the end of this month and as the supply picks up. Now, there wouldn't be any penalties. There's nothing like penalties as such because, as I said, these customers know the ground realities and they understand the scenario. We are doing our best. They also do their part on their side. And they are also cautious about what they are buying, and they're not buying anything unnecessary, as they also don't want to get stuck with those inventories like which they have been getting stuck in the past years, especially during this pandemic age. They don't want to be stuck with any unnecessary products. So they have also been very cooperative and coordinated. They have been coordinating with us based on the supply scenario. So we are doing fine with them. So there's no issue as of now. We are keeping them informed, and they have been quite reasonable with the way things are.
Okay, understood. Thank you so much, and all the very best.
Thank you. Thank you.
Thank you. The next question is from the line of Deepesh Kashyap from Equirus. Please go ahead.
Yeah, hi sir. Hope I'm audible now.
Yes, sir, you are.
Yeah, Mr. Deepesh, please go ahead.
Sure, sorry about that. So just wanted your thoughts on this new aquaculture bill that the Andhra Pradesh government has passed. So are there any changes on the ground that you're seeing because of this?
Mr. Deepesh, that's more of a initiative by the government of Andhra Pradesh to maybe, as I say, maybe to have a holistic effect and approach towards the sector, as they consider the aquaculture sector to be one of the core sectors for the government of Andhra Pradesh. So in that process, they have been trying to get everybody into the fold of processing, farming, hatcheries, feed, everybody. In the case of our activity, which is processing and export, we are definitely under the purview and being under the monitoring of the central government departments, which are part of both Ministry of Commerce and Ministry of Agriculture. We have been coordinating with them, and so we, as such, as on date, I will not be able to really give any comments specifically because that bill is, even though it's been passed, but the implementation is a bit challenging, and we have also kept the central government departments in the loop as an industry, and it's not company specific. So I cannot really comment how the government of Andhra Pradesh will be approaching or how they will be implementing as of now. But since we being into the export activity, we fall under the domain and under the purview of the central government to the largest extent with regard to processing and export, the activity of processing. So that is what I can actually answer to you with regard to this. I can answer beyond about what is not clear from the government of Andhra Pradesh at this point.
Right. But are there any talks to have a minimum support price for the farmers, just like in other agricultural products they have? Are there any talks around that?
Well, the government of Andhra Pradesh has been asking like that since you asked me that question. But I'm pretty sure you will also be aware that today's prices are far higher than what the government of Andhra Pradesh even asked to be as a minimum support price. But the point is, which everybody in the practical commercial world would be aware, that this is all about demand supply. So I don't want to comment much more than that. So it's just not going to be that and that's the demand which is not domestic. The demand is from overseas markets. So if the US or the China market or European market doesn't give the required pricing, there's no way in which any sort of support can be given, unless maybe the government of Andhra Pradesh has its own ideas of supporting the farmer by reimbursing them or compensating them, whatever. And as I said, I cannot really make any full-fledged comments because we don't know what are the final intentions of the government of Andhra Pradesh with regard to these support schemes or assistance. Yeah.
Right.
Yeah.
So, on your P&L, though, employee expenses and other expenses have not increased as much as was expected with the new plant and the value addition that you're doing now. So, are there any one-offs in this, or do you expect a similar number going forward?
No, they will be. See, first thing, this year volume, if you see, they have not been. It has not really grown up significantly if you actually look at it. So the new factory, of course, the expenses, the other expenses, of course, is more dominated with the foreign exchange differences and all that. So keeping aside that topic, but the employee expenses have not significantly grown as of now. But going into the future, as we do more business and as we produce more volume, there will be a marginal increase. Remember, we just shifted everything from our leased operation eventually to the own operation. So it's more of a lot of transfer of staff and some of the workforce which we could get from the other place also have been done. So we will be seeing an increase in the employee expenses much later as we grow our volumes much higher for sure. So it's not like today we are still in the I wouldn't say we have even come to that level of that stage of volume where we can say that there's a significant impact on the employee expenses as on date. So that's the reason. Like as I said, July the workers got affected. April, May, we had to take care of additional costs because of encouraging the workers to come, even though the government of Andhra Pradesh had been taking initiative to let the workers work in seafood processing plants, which were a key essential for safeguarding the farmers. So that is the situation. In July, mainly the second quarter, July has had a major impact because we are in the East Choudary district of Andhra Pradesh state, where the COVID cases were significantly higher, and it was more of a scare among the workers at that point of time. But subsequently in August, they started picking up. So they definitely will go up as the volumes pick up, but it will be in relation to that. It's not going to be something far high.
Understood. So lastly, my question is, you talked about the ready-to-eat doubling capacity. Now, as I understand, the ready-to-eat is just an extension of the cooking facility to the existing line. So will there be any reduction in the ready-to-cook facility?
No, there will not be. I guess we couldn't drive this point in the past. We have mentioned, here in certain areas where that the new additional capacity of ready-to-eat would be more on a plug-and-play basis. I don't remember in which con call I had mentioned that, but we did mention that, and it is more on plug-and-play, which means everything is pretty much ready, and the back end is also ready. We just need to bring in the line and do it. But however, since most of the components of this line are from to be supplied from overseas, from other countries, they do take time. That's why when one of the earlier participants asked me the time frame for implementing this doubling of the capacity, I told them it takes around 6 months from the date of finalizing. So we are right now in the planning stage. We have not taken a hard decision at this point. So we will be working on it in the next few weeks, and we will accordingly take a decision so that we are geared up very well for FY22.
So the overall capacity from 29,000 will become around 34,000. That's what you're saying, right? If that happens?
That is correct. Yeah. That is,
okay. Got
that is after the expansion, correct.
Thank you, sir. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Jagdish, an individual investor. Please go ahead.
Yeah. Hi, sir. Regarding this first question regarding our own farming. So we are having some supply constraints or other farm gate price increase, something like that, right? So how we can increase it own farming? Maybe adding some new technology or controlling like larger stream count size. So how we can manage that using our own farming?
Yeah, Mr. Jagdish, I guess maybe sorry, you might have missed my earlier remarks both in the opening as well as the other participants. We as such have been consolidating our farming activity in the present financial year, and which actually means that we are actually bringing it down to a certain extent because of so that our focus can be on the core activity of processing and export. That is number one point. And whatever own farms which we have, I mean, either in own land or lease land, whatever we'll continue to have, we will be producing to the extent they can produce. With regard to sizes and sizes and growth of larger sizes and what you are mentioning, we will be able to coordinate that better with many of our primary producers with whom our relationships are being built with and also enhanced with the support which we can give with the seed supply, the shrimp seed supply. Yeah. So that's how we are looking forward to, and we wouldn't really make a comment on a significant contribution from the company's own farming with regard to meeting such requirements as of in the present year. So the consolidation is taking place as we speak. So we are actually reducing our focus on farming and increasing it more on processing and export and hatchery operations. I hope that answers your question.
Yeah. My second question is regarding domestic shrimp consumption. We can see some online aggregators and other aggregators are actually booming a lot. I mean, in metro cities also. So is there any alliance or something partnership we can do with that online aggregators? I think the prices also seems interesting in metro cities especially. So maybe we cannot take it as a major thing, but maybe we can start it, right? So this can be in long term, it can be give a boost to our revenue, right? So can you please throw light on that?
But as on date, the company doesn't do anything significantly for domestic. It's very minuscule. It's not. In fact, the entire activity for the past more than 20 years has been more of export only, almost 99%. Right? So it's hard. There's no domestic. It's very insignificant, as I said. However, we wouldn't rule out at this point because that we need to see how things will be going into the future, hopefully in FY22 or 23. I can't comment about it right now. But we wouldn't rule it out totally. We will look forward. We'll look at it whenever there is a good opportunity. We will see how we can develop it in the domestic side also. But today I can't really make a comment whether we'll go for it or we are going to start it. No. Right now it's we are not done that in that. We are looking to that direction as on date. If there is an opportunity, like I said, we may look at it. I'm not ruling it out totally. At the same time, I'm not giving any sort of commitments towards that activity.
Okay, thank you. Can I ask last question, if you allow me?
Yes.
Yeah. So why we are not starting any feed business? So is there any restriction or margin reduction or something we are looking at? Why we are not starting feed business?
Our company has never had focused on the feed business, number one. And just in case, maybe I'll just make you aware that there's quite a good amount of capacity of feed in the country already by several participants, several players, and we don't really look in that direction as of now. And even though we did have some plans in the past, but we dropped those plans and we wanted to focus more on processing and export. That's the reason we even went public and we built this facility. The objective of going to public is to build this facility and focus more on processing and export of shrimp products to overseas markets. Yeah, so we haven't really looked at it, and I cannot say anything. There is no plan at this point. Sorry to inform you on that.
Yeah, thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Subramania Choudary for closing comments.
Thank you, Mr. Steve. Thank you all for joining us. We hope you continue to stay safe along with your family during this pandemic age. If you have any queries, please reach out to Stellar IR Advisors, our investor relations team, directly at ir@apexfrozenfoods.com. Thank you very much and have a good day.
Thank you. Ladies and gentlemen, on behalf of Apex Frozen Foods Limited, that concludes this